Kick off the show today with Mondi. Of course, it's an international paper and packaging company. It says its first quarter underlying profit came in at 187 million euros. This is due to a strong operating performance during the period, as well as positive trading conditions. Mondi's net assets are largely unchanged from the fourth quarter, but input costs remained elevated. The group says its financial position remains robust and it will continue to make further progress this year as upward pricing momentum continues into the second quarter. A little earlier I spoke to the CEO David Hawthorne and got his views as to why investors have been so averse into going into the paper sector. Let's take a look to see what he had to say.
I think you need to break it down. It's not an easy sell, let's be honest, because the paper industry, for very good reason, doesn't have a good reputation. It hasn't delivered value well for a long time. But you need to break it down. And the fact is that if you're in the industrial packaging space and the consumer's packaging space, you're dealing with a product which is inherently in growth and is inherently required. I mean, every single consumable and most durables that you buy on the supermarket shelf come through a corrugated box somewhere in their value chain. And corrugated packaging has been proven to be economically and sustainably, from an environmental recycling point of view, about the best form of packaging you can have for those types of products. So you need to break it down. If you're a pure printing and writing company, paper company, I'd hate to be in that space. Now, we have some printing and writing exposure, as I mentioned. It's in the office paper area. It's this cut 4, A4 stuff. The good news in this grade is that this grade continues to grow very strongly in the emerging world. Yes, it is mature in the Western world, but our main exposure is in the emerging world. South Africa, Eastern Europe and Russia is where our predominant uncoated fine paper exposure is.
Gentlemen, welcome to Hot Stoxx. Thank you very much for joining us. Let's start off with you, Keith. I mean, are you convinced about the paper sector? And Mondi, we've actually spoken about paper before and we keep talking about the technological advances, but an interesting point that David makes there, really pointing to the fact that packaging is a very integral part of our lives and anything you buy needs to be packaged, it seems. Is that a reason enough for you to buy into Mondi?
Well, no, I wouldn't go that far. The point he was making that I agree with is that paper as a commodity is not going to disappear. The demand's there, we need it, but its use is changing. It's becoming more industrial and throwaway as opposed to finer papers. So you position into that space, you know, it's simple. You can start to track the GDP growth and industrial activity. And in that way, Mondi's well positioned.
Okay, Frank, let's get your views on paper.
Yeah, look, it's a good set of results, but something interesting I found in just snooping around, I found a bunch of research people that have come up with the conclusion that South African toilet paper is too short, and they're going to start changing this. So Mondi's got a good future ahead of it. Because
well, based on that, yes.
That just adds volume.
There we go, just adds volume, yeah.
But no, good set of results. They say that there's going to be a lot of margin pressure that's coming, and there most certainly is from transportation costs,
so
oil price, input costs, but also from Eskom. In fact, SAPI is now warning that Eskom's going to do some serious damage to them in the next little while. The other thing is they say that the paper world demand is starting to recover. I think it's a dying commodity, a dying product in certain areas. Obviously in packaging and things like this.
Yeah, exactly. Shouldn't we differentiate between
sure, in packaging and things like this, it's fine.
Yeah.
But I mean, if you just look at the growth of the New York Times and you look at the growth of newspapers and magazines and things like this, they're all going down. So there's quite a, and as digital is rising, paper is going down. So there is going to be future pressure on paper, in time to come. But the company's got good cash flows, it's strong. They're going to spin off and list separately one of their packaging companies, and I think that's a good thing. So that'll be listed separately. An interesting thing with packaging, though, is it's a very good indicator of the growth of the economy, because everything is packaged. So you can see, basically, you look at Nampak, you look at companies like this, it's a good growth indicator of the economy as a whole. So there's an extra kind of little
so nice barometer there.
Yeah, nice barometer there in Mondi as well.
And that's why having the packaging side of Mondi separately listed will offer you, first of all, two risk profiles, not an amalgamated one, and second of all, it'll actually excuse the pun, unpackage those numbers for us.
Well, I mean, it's fascinating because I did speak to David Hawthorne about Africa as a potential, business hub for paper and for packaging. And we know we've got 1 billion potential consumers, all of which will need various products. Do you think that they should be focusing more so on Africa as opposed to Eastern and Western Europe, where they have had a very big footprint?
I think the African market, particularly on the consumer side, if you're talking packaging, tins are actually more durable. And you need to view Africa in that sense. So there's definitely growth as the retailers move into there, but you can't lead the retailers, you have to let the retailers lead you. That said, once again, they're positioned well for that. The European market, well, that's
Eastern Europe is doing quite well for them, but West doesn't look as strong.
Absolutely. It's who knows really where it will be in 5-10 years' time, and that's the problem. I mean, they are a longer-term business. There's no short-term plan when you have huge manufacturing facilities.
Yeah, the share price has actually done pretty well.
And this is your barometer in terms of whether you should be buying into a stock or not, of course, Frank.
It's outperformed SAPI. So it's not too bad at all.
Would you say that going forward, Frank, for the paper industry, it's looking strong? I know that we're differentiating between packaging and newsprint and so forth. We know that there was a lot of overcapacity, so SAPI obviously bear the brunt of that. Do you think that now we're in a safe position?
You don't want to hear my view on that.
Of course I do. This is why I'm asking.
We're not in a safe position by any means. I think, and this has got nothing to do with Mondi, I think the markets as a whole at the moment are looking very, very vulnerable. We're looking at GDP numbers coming out of the United States and problems arising all over the place. I think we're headed for quite a substantial downturn in the markets. So Mondi is a good share, but it's not the right time to be buying now. Simply because of its exposure to the market as a whole.
Your view on that, Keith?
Oh, well, I have to agree with Frank that first of all, paper is not a fantastic industry to be in, and second of all, I actually prefer Mondi over SAPI. But once again, by buying Mondi, you have an opportunity cost of buying anything else, and there's a hell of a lot better opportunities out there if you have to be in the market.
Okay, so Mondi, hot or not? No, you're preempting me. So not hot. No. Mondi not hot for Keith Mclachlan. Frank Black, hot or not?
The share is starting to look quite good for the future, but not hot. Not hot now. Not
You're
hot.
quite bearish, actually, Frank. I'm quite surprised.
Not on everything.
Not on everything.
Always, one of the beauties of the stock market is there's always individual opportunities, and there's some spectacular opportunities within the market. You've just got to know where to look at and to find them.
Well, let's see if the stock tickles your fancy. World number 5 gold producer Harmony Gold has reported a 32% gain in the third quarter headline earnings per share to 91 cents after drilling at its Wafi Gold mine yielded good results. Gold production was, however, slightly lower by 2% to 316,000 ounces quarter on quarter. The company remains bullish on the gold price, and with its share price hitting record highs for this year during the third quarter, Harmony has a positive outlook going forward. This is what CEO Graham Briggs had to say.
In being able to diversify, we've had all our eggs in one basket in South Africa. Furthermore, if you look further back, had all our eggs in a marginal type basket. Now we're upgrading the portfolio, so that's important. Now the diversification into different countries, but we're also going to have to diversify a little bit more into even some more countries. But Papua New Guinea is a huge, huge part of Harmony's business going forward.
Don't do it now.
All right, looking forward with the likes of Harmony. Keith, let's kick off with you. Harmony, of course, has been one of those stocks that has been a speculative stock and has also been quite a big favourite in South Africa. Did you buy into the stock at the right time? And given these results, do you think that we could see more volatility going forward?
Well, to answer your first question, no, I never bought into the right time, but that's because it's not on my buying range. Yeah, I have preference for smaller stocks, but Harmony is an interesting story. Particularly, I mean, it's the Wafi Gold. It is, as he says, is a game changer. It's going to be adding, when it comes online, 20 to 30%. More volume to their ounces. But what is also more critical is that it's actually changing them out of South Africa. they're in a way disinvesting by not investing further here, but by going further afield.
Do you think it's being reflected in its share price at this point in time? Because we know that it was so close to 100 Rand.
I think there's been a large amount of speculation based on, you know, the RBC stimulated rumours. Is there or is there not going to be a takeover or not? What I would like to see in Harmony, I want to add my spin on that, is that they have a whole lot of growing assets. They have a whole lot of declining ones. Separate the two. Because your declining ones are diluting your growing assets. And unfortunately, a large amount of those declining ones are situated in South Africa. So it could be a logical fit to spin off the South African arm and you actually have a
That's an interesting point that Keith makes. And we know that this is also happening with the likes of AngloGold Ashanti. We know they've got a very big chunk out of South Africa, but most investors and the share price basically reflecting the troubles that we experience in South African operations when it comes to these gold miners.
Yeah, look, I think, you know, I agree with Keith there. We're getting better grades from the newer operations. The older operations are not producing well. But here's something interesting. Harmony share price is up by 120% in the last 10 years. That is pathetic.
Dismal, right? Okay.
Pathetic. The gold price in dollars in the same period of time is up 480%. And in Rand terms, it's up 380%. Okay. So Harmony has lagged the gold price by a long way. And over a 10-year period, if you'd been invested in this, you would have. It's a dismal performance.
Well, let me ask you this: this over 100% gain that we've seen over the 10-year period, has most of it been experienced over the last 2 years, perhaps?
No. The share has jumped up in the last little while, the last few months. It's had a very nice run.
But so mostly flat prior to that.
But from a longer-term perspective, it's you know, it's flat. Production at the moment is per kilogram is more or less flattish. The one interesting thing with this this Wafi Golpu is that it may lead to a takeover. There's rumours that there could be that Harmony could be in for a takeover fairly soon. That may throw a couple of cats amongst the pigeons and create some excitement. Within the share. Also, the other interesting thing with Harmony, which I think will be good for it in the future, not right now, is its exposure to uranium. Now, we know that uranium is very much a donkey at the moment because of what's just happened in Japan. But I can tell you something. Nuclear power is not going off. What happened after Chernobyl is the same thing. The uranium price took a smack. Everybody wanted nothing to do with it. It did no damage to the to the nuclear industry over time. So this is going to bounce back. And when the uranium price starts bouncing back, Harmony is going to.
And of course, a story for all gold miners in South Africa, because you cannot mine gold in South Africa without uranium as a byproduct. On that premise, Keith, tell us a little bit more about Harmony and whether you think it's hot or not.
Well, the shift in the strategy with Wafi Golpu is really out of South Africa, and it's also even further because it's a copper gold deposit, and they've got the Hidden Valley mine sitting in PNG, which is a copper silver asset. So in a way, Harmony is still a primary gold producer, but it's shifting into other commodities just by location. And then that shift is actually taking it outside of South Africa. So Harmony, as interesting as it is, I want those operations. I don't want the legacy operations. And so the overall picture, you know, there may be an argument, and there's a lot of speculation and the volatility that you can trade in and out of the share, but as a long-term investment, until it organises legacy assets, I prefer not.
So at 93 Rand, not a buy, not hot, even though there's speculation that it could be a takeover target.
Absolutely.
Okay. Frank, I know, yes, share price movement's a big thing for
you.
Speculation,
big thing. But talking of share price movement, you know, the big three, Harmony, Goldfields, AngloGold, those are the ones that everybody screams the odds about and says, yeah, those are the ones to go for. They're donkeys. Gold One is up 2,600% in 10 years. Now, how about that? Now, that's a small player. Now, that's a share that the fund managers and all these other guys frown on. I say, don't touch it. It's too risky. It's a small cap. It's whatever. 2,600% versus 120% for Harmony. Guess what I'm going for? And I've actually got gold.
But it's already had such a strong run. Why would you buy into it now? Are you sure that it would go up even further?
No, it's not. Harmony's not going up. It's look, it may go if the gold price really flies, which it's not likely to do. I mean, the gold price actually came down below 1,500 today. It's back up again. But the gold price needs to do quite a lot more for Harmony for it to really have an influence on Harmony. Harmony is just not going anywhere in the longer term. You know, as a short-term trading instrument, fine, great, then you can get in and out. But if you're investing, you know, as those numbers speak. 120% versus 2,600%. Guess what's my choice?
I see you agreeing there.
Yeah, well, Harmony's problem is it's exposed to the cost risk of South Africa. And actually, South Africa is becoming increasingly expensive to mine in. So, you know, assuming a flat gold price, if actually the cost risk disappears, Eskom suddenly stops dropping, you know, stops rising its electricity, wage increases, stop being above inflation, that cost risk removes, then Harmony's local you know, productions actually look, you know, quite profitable and everything improves. It's that cost risk.
On that note, we're going to a very short break. When we come back, we'll be chatting about Pan-African resources, digital and mixed telematics. Don't go anywhere.